2024 has a number of macroeconomic headwinds that could deal a blow to growth. The question is, are they here to stay? It's the subject of a new report from Sankore Global Investments, the title of which, Navigating a New Normal. We're very happy to have the head of investment at Sankore Global Investments, Efosa Aluyi, to join us. Efosa, good to see you again. Thanks for joining us. So you've got an outlook. The report says, I think 2.9% growth for the globe, and 1.4% for advanced economies and emerging markets. If we can, I guess, start with global growth, the 2.9% figure that you put out there.
Yeah. So essentially, that's a further slowdown, if you will. Right now, if you want to look at how things are moving, you obviously want to look at right after COVID. The response to COVID, of course, was all of that fiscal support, and then, of course, the bottlenecks that, supply chains created then led to a lot of inflation, right? In response to that, to kind of like tame that inflation, we've seen very, very significant interest rate hikes. We haven't seen those in a generation, particularly in the West, right? So all of that monetary tightening is basically creating very tight conditions in the global money markets, where that is expected to slow growth. The impact of that, we still haven't felt the full weight of, and we feel that coming into 24, the last batch of that impact will begin to feel in 24, and certainly would take the sting out of some of the growth that we expect in 2024. So that's why we think that global growth is still going to slow in 2024. We are likely to see a recovery from here on out, but in 24 we think that very tight monetary policy that has been in play over the last 18 months thereabout will keep global growth subdued.
What about the advanced economies at 1.4%?
So it's even hitting the advanced economies even more, right? Because that's where we've seen significant tightening. Not that they haven't seen that type in the US, for instance. We haven't seen that tightening since the 80s, right? So it certainly has implications for a lot of things for the housing market. It has implications for how firms can borrow. In fact, it's at the heart of the commercial real estate issues we're having in the US right now. So clearly that's going to significantly subdue the sort of growth that we expect in the advanced economies. Now in the US, for instance, that economy has shown really great resilience. The labor market is still quite strong, but then just this morning we saw news that the UK had essentially entered recession.
Right.
Same thing with Japan as well. So we're going to see that slow down, for the advanced economies, just on the back of this very tight monetary policy, the impact of which, we'll continue to feel, at least for the first half of this year.
And emerging markets, your outlook there as well, as far as growth, I think 4% from 4.1, right?
Yeah. So again, it's a further slowdown in emerging markets, right? If you look at across EMs, you are seeing a number of these economies having, price stability issues really around their currency, around inflation, and all of that. So these issues would, continue to impact growth. Also, you're looking at the possibility of some, debt overhang or a debt debacle, if you will. It's become significantly more expensive to, raise those sort of monies and even keep them going. So these are issues that will continue to create significant headwinds even for emerging market economies in 24.
Speaking of which, let's put up this chart for you. You seem pretty bullish on the BRICS plus the Brazil, Russia, India, China, and then additional economies that would join them. So yeah, I really like this chart here. So you're saying BRICS plus forecast to dominate the world's GDP. What's your triggers for that?
I mean, the latent capacity that sits within those BRIC economies, right, is a huge force. Also, you're seeing, some of the big economies that have driven growth over the last maybe 20 years are certainly beginning to mature. Something like China, for instance, right? Also, the sort of growth that you expect in the advanced economies is certainly not as strong as what you see for, the emerging markets, which essentially make up a substantial part of the BRICS. Now, whether this happens or not really remains to be seen, but we think that the potential really is there for these BRICS plus economies to become dominant and account for a more sizable portion of global production, really.
Yeah. Okay, now I want to take you to interest rates. Your report talks about the higher for longer, I guess longer elevated interest rates from the major central banks, US, UK, ECB, and so on. What's the impact of those rates remaining there? And could they even impact these BRICS nations and other emerging markets that you talked about?
Yeah, absolutely. Again, I think that's even the thrust of what we've put out, right? A new normal, right? Before COVID, you had interest rates at zero, right? In the developed world, you had inflation pretty much at near zero, but we think that the tectonic plates, if you will, of these things have shifted. We don't think that we're going back to those zero interest rate regimes. We don't think that inflation is going to go back to those near zero levels that we're seeing. There's been a lot of progress. In November 2022, inflation was 9.1% in the US. It's come down quite significantly to just, slightly above 3%. But we see that it is sticky downwards. It's not dropping as quickly as the Fed probably expects to get to that 2% target. And that's what we think will happen. We don't think that it will go back to that level really quickly. So just on the back of that, we think that a lot of things are going to change such that it will keep interest rates higher than where they are coming from pre-COVID. If you however look over the last year or two, interest rates certainly have come off, and we think that they will come off, even more this year as the inflation situation improves. However, we don't think that we're going back to those pre-COVID interest rate levels anytime soon. Yeah. So that's the sort of new normal that needs to be navigated really.
In depth. I love this report. Okay, geopolitical tensions. There's an excerpt from the report. You highlight them all. Coups in Africa, Israel, Hamas, Russia, Ukraine. Yeah, there they are. Ukraine war, Israel, Hamas, African coups, China, Taiwan. So, is this the biggest headwind?
Well, these are potential headwinds, right?
Yeah.
These are global risk issues that we've got to pay attention to. Like I said the last time I was here, these are issues that have the potential to create a black swan event, right? You look at the Israel-Hamas situation that has sort of escalated somewhat. Now, over the last week or so, not much of tensions there. But again, just yesterday we saw Israel striking Hezbollah positions, right? Because a position was struck in northern Israel. So this conflict has a potential to widen even further, and it certainly has implications for global growth, global trade, and all of that, right? You look at the Russia-Ukraine situation; it's still there, right? The Western support seems to have sort of faded a bit, so again, the potentials again for a wider conflict with NATO are still sitting there really. So these are issues that don't seem very strong right now, but they have potential to create an event that you might not be able to, hedge against.
Yeah. Okay, bringing it home to Africa, report also delves in there. You had a summary of, the coups that have occurred on the continent. Even you did talk about this the last time you were here. Is that, as far as the Sahel is concerned, and so here it is. I mean, from 1950 all the way to recent times. What's the outlook for the Sahel? I guess with where these military regimes are.
It has potential to worsen the insecurity situation, right? That you have in the north of Nigeria, for instance. It all boils down to all of the instability that you have in that entire Sahel region. If you look at that coup belt right now, essentially almost 5 countries contiguous have had coups, and you have military regimes in those countries. You've also had developments around the fact that these countries have then decided to pull out of ECOWAS. So it has very strong potentials to create a lot of instability, particularly for security, and you really can't downplay that, because that has been at the core of some of the biggest challenges that we've had as an economy. It has potentials to impact even more stable economies in the West African sub-region, really. So that is something to really keep an eye on, because the potentials to create conditions that are not palatable, they exist very strongly there.
Coming out of Africa, going to China, you did mention this last time about the maturity of China's economy, because there's all sorts of headwinds. Just for anybody who missed it, your report talks about it. What's that maturity discussion about? Yeah,
so we look at a number of things really, right? If you look at growth last year in China, it was 5.2%. That's the slowest we've seen in about 24 years, right? Beyond that growth, we're also seeing other factors that are essentially contributing to that slower growth that we're seeing in China. If you look at the demographic factors, right? China's population for the first time since 1978 dropped last year, right? India overtook as the largest, most populous country in the world, right? So if you also look at the demographic in China, ages between 15 and 60, that demographic is beginning to drop, right? So you are seeing that demographic drop. Also, if you look at wages, right? Because China had essentially been the manufacturer of the world, if you will, right? Now, wages have essentially doubled, right? In China, from as far back as 2012, they have doubled, making China a lot less competitive when it comes to that manufacturing. So a lot of that manufacturing have moved abroad to countries like Vietnam, Bangladesh, even to countries like Mexico. Some have even moved back to the US, right? So the competitiveness of China from a manufacturing standpoint is also beginning to reduce. If you look at global imports from China, it was about 65% in 2018. by the end of 2023, that dropped about 57%. So that continues to drop. And then, of course, the real estate issue is very well documented. That sector, with all of the ancillary services, account for anywhere around a third of the Chinese economy. Now, the issues there, still doesn't seem like, they have a handle on it, right? It still continues to create a significant headwind for that economy. So if you look at all of these indices, we don't say that there is a slowdown necessarily going on there. We probably think, and we think that there's probably maturity going on. Like I said the last time I was here, you can easily draw parallels between what is going on in China right now and what happened with Japan in the 80s, right? Where, Japan had very strong growth in the 70s, coming into the 80s, and it was even touted to take over from the US at some point, but that slowed down and that country entered into 2 decades of deflation, right? We're seeing the same thing sort of like repeat itself in China. Deflation has also been a challenge in China as well recently. So these are the issues, conflagration of issues that we're looking at that makes us to believe that China is probably maturing.
Yeah. Got to talk about technology real quick. You talk about tech regulation. We all saw what happened to Mark Zuckerberg a week or 2 weeks ago, where he was, fried. That's the U.S. Senate hearing. Is tech regulation, is it necessary, or could it hinder growth? What's your look there with your report?
I think it is necessary, right? Even some of the brightest minds have alluded to the fact that, particularly with the advent of AI and what AI has done and how it came out last year and all of that, that it is important that this thing be regulated. Now, the regulation certainly has potentials to either increase the value or put a lead on innovation, if you will, right? And this has potentials to really impact the value of these companies. If you look at last year, the tech sector accounted for about 70% of the growth that we saw in the stock market in the US. Now, if regulation then threatens to stifle innovation, and then it certainly has a huge potential for the value of these companies, and by extension, the broader economy, really. However, these are issues that have to be confronted and dealt with at the end of the day.
Hey, Efosa, look, you guys at Sankore, you're doing great work. This is a lovely report. We could talk about this for the next 3 hours because there was, so much in there. But we thank you so much for joining us to give us the lay of the land as far as how the outlook for the global economy is.
Thanks for having me.